In this module, we are going to start with practice set 4.3. Before this, I hope that you have recalled what I have explained in my last module, that is about shares, then face value, market value, okay, then the difference between face value and market value. I hope you remember that. If not, just recall it, because that is what we are going to use to solve these examples. Okay, so let us begin with the first example. Complete the following table. Table is given in the textbook. You can refer the textbook. How is the table? I have just solved it for you all to understand. I have solved all the examples so that I can cover up with less time. So I'll just explain how I got this answers. You can also cross check. Okay, so check with the table that is given in the question in your textbook. So first one, they have given face value, they have given us 100. Okay, and what they have told, they have told in the second column that share is at par. I hope you remember that. What is par? Share. If share is at par, par means when face value is equal to market value, or market value is equal to face value, then you say that the share is at par. So what will be market value? It is equal to the face value, that is 100. This is given to us for face value, therefore market value is 100. Now second one, see, they have given premium. Now when it is premium, when the share is premium, it is premium when market value is greater than face value, and you need to calculate face value. They have given market value. Market value is 575. Okay, and premium they have given that it is 500. So what is face value? Face value is market value minus premium, that is 575 minus 500, that is rupees 75 is your face value. Okay, now in the third one, see, they have given that face value is 10 and market value is 5. So what is the difference? That face value is greater than market value, means market value is less than face value. So when is this condition? It is the condition when share is at discount, right? Share is at discount. So that is your answer. And by how much rupees? Is by 5 rupees. Okay, fine. Now let us see the second one. Second question. Mr. Amol purchased 50 shares of face value rupees 100 when the market value of the share was rupees 80. Okay, so when did he purchase? He purchased 50 shares of face value 100 and the market value of the share was 80 rupees. Company had given 20% dividend. Okay, find the rate of return on the investment. Okay, I hope you remember what is dividend income. Dividend income is when the person gets value for his share, what he has purchased. Okay, if it is in the profit, you get dividend. Okay, so the company had given 20% dividend. Okay, so let us write down what do we have. We have face value. What is the face value of the share? That is 100. Okay, so face value is rupees 100. What is the market value? Market value is rupees 80. Okay, so investment per share. Per share. See, he has purchased how many? 50 shares. But for one share it is rupees 80. So for getting one share of face value rupees 100. So he has spent how much? 80 rupees for getting one share whose face value is rupees 100. And dividend given is 20%. Right? That is rupees 20 per share, means if it is 100 rupees, then you get 20 rupees per share. Right? So how do we calculate? You need to find what? Rate of return. So how rate of return is calculated? Rate of return is calculated by dividend income upon sum invested into 100. Okay, this is how you calculate rate. How? Dividend income. What is dividend income? See, here dividend is 20%, that is rupees 20 per share. Share of 100 rupees, right? So 20% of 100 is 20 rupees. So 20 rupees is his dividend income. Now this is, and sum invested, how much is he invested? He has actually purchased for 80 rupees, right? Face value is this, but market value is 80. So sum invested is 80 into 100, and when you calculate this, you get answer as 25. So what is the rate? Rate is 25%. Okay, that is your answer. Let us move further to see example number 3. Joseph purchased the following shares. Find his total investment. You need to find total investment. Okay. Now understand, in company A, from company A, he has purchased how many? 200 shares, whose face value is rupees 2 and premium rupees 18. Okay. Now from company B, 45 shares, whose market value is 500, and company C, who has taken 1 share, whose market value is rupees 10,540. Okay, understand. We'll go one by one. First we'll consider for company A. Now investment, he has done some investment because he is purchasing, so that is his investment. Okay. So in company A, he has purchased 200 shares, whose face value is rupees 2 and premium is 18. So you all know what is market value. Market value is face value plus premium, that is 18 plus 2, that is 20 rupees is his market value. This is market value. Now investment, how do you calculate investment? It is, this is for 1 share, 20 rupees is for 1 share. How many shares he has purchased? 200. So 200 into 20, that is number of shares into market value of 1 share. So he has invested how many? 4,000 rupees in company A. Okay. So this is one investment. Okay. Now the second company, see, he has taken 45 shares. 45 shares whose market value is 500. So you don't need to calculate for market value, it is already given. So investment will be what? Number of shares into market value, that is 45 into 500. This is the second investment in company B. Okay, that is 22,500. In company C, he has taken only 1 share, and that too of cost 10,540. This is the market value given, right? So you don't need to calculate for 1 share it is, and he has taken only 1 share. So this is the only investment, that is 10,500. So total investment will be what? This 4,000 plus 22,500 plus 10,540. Total is 37,040 rupees his investment, total investment. Okay, so let us see fourth example. Srimati Deshpande purchased shares of face value rupees 5 at a premium of rupees 20. How many shares will she get for rupees 20,000? Now you need to calculate number of shares she must have purchased. Okay, what is given to us? It is given to us face value of rupees 5, premium is 20 rupees. So market value will be face value plus premium, that is 5 plus 20 rupees, 25 is the market value. Now sum invested, we know sum invested is equal to, means the total investment done is equal to number of shares into market value. Okay, so what do we have? We have sum invested, that is 20,000, and number of shares we need to calculate into market value of 1 share, that is 25. So number of shares are here, 20,000 divided by 25, you get 800. This is your answer. How many shares she must have purchased? 800. Okay, do not forget to write answer statement. Let us see fifth example. Shri Shantilar purchased 150 shares of face value rupees 100 for market value of rupees 120. Company paid the dividend at 7%. Find the rate of return on his investment. Very easy example. Face value is already given. Market value is also given. And rate, this one, at what rate the dividend is been given, that is on 7%. Okay. And on what investment it is? of 120 because he has purchased for market value of 120. Okay, rate of return formula is dividend income upon sum invested into 100. So for 100 rupees, if it is 100 rupees, what will be the dividend? 7 rupees. So we need to consider that initially. So 7 rupees upon 120 into 100. Dividend income is 7 upon 120 upon this market value. 120 into 100 approximately means 5.83%. That is rate of return. Okay. Okay, let us see this last example, 6th. If the face value of both the shares is same, then which investment out of the following is more profitable? What they have given is company A, dividend is 16% and market value is 80. Company B, dividend is 20% and market value is rupees 120. Okay, very easy example. What are you supposed to find is which investment out of the following is greater, which is more profitable. Okay, so let us write down first what is given to us. See, if the face value of both the shares is same, so let us consider that the face value of each type is rupees 100. Now in company A, where dividend is 16% and market value is 80, so what is the meaning? Meaning is that if you invest 80 rupees for a share, for one share, dividend is rupees 16. So what will be the rate of return? It will be dividend income upon sum invested into 100, that is 16 upon 80 into 100, that is 20%. Okay. Now company B, dividend is 20% and market value is 120. It means what? If you invest 120 for a share, dividend is according to 20%, it will be rupees 20. So again here rate of return will be 20 upon 120 into 100, that is 16.67. This is approximate. Okay, 16. Now which is greater, 20 or 16? 16.6. 20 is greater. So which company? Company A is more profitable. Okay, that is your answer. I hope that you have understood the examples from practice set 4.3. Let us proceed further with the same topic, financial planning. And let us see something further new, that is brokerage and taxes on share trading. I hope you remember shares. So what is called as brokerage and taxes on share trading? Let us understand this. What is brokerage? See, brokerage is the person who is dealing with buying and selling of the shares at the stock exchange. You must have seen people are sitting there and they are calculating the ups and downs of the companies in the stock exchange market. Okay, so this term brokerage is related to those. Let us read this. We buy or sell the shares through the registered members. Okay, these are registered members or organization, that is an agency of stock market. Okay, so these members actually, they are registered members. They are having their own demat account. Actually, you should also have a demat account if you are dealing with this buying and selling of the shares of the company. Okay, so these people, those who are registered members, they have to register themselves. These people are called as share brokers, and these share brokers, they charge some amount. Okay, because they are providing you service. Like if you want to buy some shares, they are the middle person. They are the ones who will help you in buying the shares, and also if you want to sell some shares, then these are the only person. You have to go through them. These the companies, those who have introduced themselves in the share market, will not directly contact you. They will contact you through this share brokers. Okay, so the amount that you pay to them, that amount is called as brokerage. Okay. Now this amount is paid on the market value of the share. They take some percentage, they take it as a brokerage amount. It is similar to commission, but it is not called as commission. Because why? These are the people, those who are giving you services. They are unemployed. They are registered members for this. Those who deal with all such things in the stock market. Okay. So like for example, if you want to buy some shares, you need to have your account which is linked to the demat account at the stock market. These people, when you are buying, you have to through your account, through demat account, you have to pay it to them. And if it is in the profit, then it will be directly credited to your account through them. Okay. So these are the people who are actually working for you. So these people are called as share brokers. I'll just read this once for you all to understand again. See, we buy or sell the shares through the registered members or organization, that is agency, of the stock market. These members are called share brokers. These registered members are called share brokers. Share brokers charge some amount for undertaking the service of buying and selling of shares. Okay, even if you buy or even if you sell, you have to pay the brokerage amount. This amount they charge is called brokerage, and it is paid on market value of the share. Okay. Now understand this. See, at the time of buying shares, see, buying price of one share will be what? Then buying of one share will be market value plus brokerage. You have to pay brokerage amount. So that will be your total investment. Okay, means you are buying, means you are investing somewhere. Okay, so that will be your total investment. And at the time of selling means you are selling your share. So that will be market value minus brokerage, means the amount that you are going to get. Okay, so suppose if you have buy a share of 100 and you paid some brokerage of 20 rupees. So you have bought the thing for 120 rupees. Okay. Now at the time of selling, suppose you are selling it for say 50 rupees. Okay, example I am giving. Say you are selling it for 50 rupees and you pay some 5 rupees as a brokerage. Okay, so how much amount you will get is 45 rupees. Understood? This is just an example I have told you so that you understand. So this is your investment amount. At the time of buying is your investment amount, and selling price is after selling your share, whatever you get is your selling price. Okay, after paying brokerage too. Okay. Now let us see this. What is GST on the brokerage services? See, they are giving you services. So share brokers provide services for purchase and sale of shares of their clients. These services are charged under GST. And how much of GST is applicable? 18% on brokerage GST is applicable. Okay, so we will consider only GST on brokerage. Right now we are going to consider only GST on brokerage. Okay, 18%. For your study it is only on brokerage. Okay. Now, see, let us understand this solved example. It is even given in your textbook, but let us try to understand this. Nalini Tai invested rupees 6,024 in the shares of face value rupees 10 when the market value was rupees 60. Okay. Now, she sold all the shares at market value of rupees 50 after taking 60% dividend. Dividend is what? Dividend is company has got a profit. So they give you some percentage on your shares, right? So that amount is what? 60% the amount that they are going to give you. So she got a dividend of 60%. She paid 0.4% brokerage at each stage of transaction. At each stage of transactions means where? While investing, also while selling. While investing means while buying the shares she has paid a brokerage, while selling she has paid a brokerage. At what rate? At 0.4%. Okay. Now what was the total gain or loss in this transaction? So whether she has got profit or whether she has got loss, That you need to understand. See, understand. See, rate of GST is not given in this example. How much it is? So it is not considered. This is what it is given in your textbook. So we are not going to consider that, okay? Now share purchased, that is face value was 10 and market value was 60. Now brokerage, also, while purchasing she has to pay brokerage. Brokerage on what? Brokerage is always calculated on market value, okay? So brokerage of how much? 0.4%, that is 0.4 upon 100 into market value, that is 60, that is rupees 0.24, okay? Now the cost of one share will be what? See, one share was of market value 60 rupees plus the brokerage, that is 0.24, so 60.24 was the cost of one share, okay? Now how much of shares she has taken? Now they are not given, given invested amount. So invested amount upon cost of one share will tell you how much shares she has taken, that is 100 shares she has taken, okay? So this was her investment amount, that is 6,024 rupees, and cost of one share is 60.24. So when you divide this, you get the number of shares. Now shares she has sold for the face value of rupees 10, that is correct, but market value was 50, okay? And she has received, she has given brokerage in this transaction also, means while selling at the same rate, that is 0.4 on the market value, that is 50, so 0.20, okay? Now the selling price per share for one share will be how much? See, you are selling, so you are giving brokerage on the amount also, so 50 minus 0.2, that is 49.80 is the amount you are going to get after selling a share. This is for one share. So it will, for 100 shares it will be, we have calculated, she has purchased 100 shares. So for 100 shares it will be 100 into 49.8, that is 4,900. Okay. Now she has received dividend, that is of 60% on the face value. See, dividend you get on face value, not on the market value. You calculate brokerage on market value, but you get dividend on face value. Remember this. Okay, otherwise you get confused. Children do mistakes in this. Always remember, dividend, that is the profit the company gains whose share is, they calculate the amount on face value. And the brokerage is always counted on market value. Okay, remember this. Keep on telling you again and again, yourself, I mean. Okay, so dividend received is 60% on the face value, that is 10, that is rupees 6. So dividend on 100 shares will be how much? Rupees 600. So her income that after selling those 100 shares is 4,980 plus the dividend, that is 6,000 shares received, that is total is 5,580. She invested 6,024, she received 5,080, that is she has got a loss of rupees 444. So Nalini Tai has incurred a loss of rupees 444. I hope this example is clear to you. This is your textbook example only. So let us proceed further. What is the meaning of mutual funds? You must have heard in the advertisement, no, television, mutual funds are subject to market risks. Kindly read the documents carefully before you sign. Okay, I hope you remember this. So related to that only, yes, they are right ones. Mutual funds. What are mutual funds? See, many of you must have heard that the people invest in the shares, means they buy some shares. Now it is not like that ki for this moment if the company is at profit, the next moment the company may also get a profit. No, it may go to a loss. This may happen, right? Suppose you have 100 rupees, okay, and you invested that 100 rupees for buying a share. I am taking very small example, but for you all to understand. See, you invest in the company for this one. Share, you purchase a share of 100 rupees. Now for the first attempt, you got a profit of say 50 rupees. You got that? So 150 you got it back. But suppose you invest that 150 rupees in a company and the company is at loss and you get only 40 rupees back. So you are at loss, right? You have invested 150 rupees and you are getting loss. So in this share market, no, it is not fixed that you will always get a profit. Sometimes you may get a loss. So what do we do? See, this mutual fund people, no, these are the people, these are professional peoples who actually guide you where to invest and how to invest. Means, for example, instead of investing that 100 rupees for buying one share, what these people will do, they will suggest you some 10 to 5, means 5 to 10 companies where you can invest 10 rupees or 20 rupees out of that 100 rupees. So what happens is, suppose you invest in 10 companies. 10 companies shares you take for say 10 rupees. So even if say 3 companies are in loss, the other 3 will be in profit. So suppose you, even if you lose that 30 rupees, you might get more than 70 rupees plus more than 100 it will out of that 7 shares. Okay. So how to invest in this are these plans for mutual funds. Okay, these people do tell you the plans. This is called mutual funds. Let us understand this. What is mutual funds? See, many investors with common objectives give their money to the professional experts. These are the ones who are working behind mutual funds are the professional experts. Okay. So these professional experts invest in share and also invest in various schemes. Okay. As a result, investment is diversified, which reduce the risk factor, and total dividend or profit is divided equally among investors. Okay. So these people do guide the investors, the one who wants to buy shares or something like that. They guide you properly that okay, chalo, some amount up shares mein laga hai, to some amount you put it into schemes. Must have seen ads, na? Like per month you pay some 500 rupees and after a few years you will be getting some amount. Okay, something like that. They have the schemes accordingly. I'll not go into much of detail of what schemes do they have because I am not a professional expert for mutual funds. But understand that these people are the mediators who guide you properly. Okay. Now, mutual fund is a professional managed investment scheme usually run by an AMC, that is asset management company. These are actually certified for this. People are been given certification, or the company has been given certification for asset means your property, your money. They manage it properly. So asset management company. They invest the money given by the investors in different schemes like equity funds, that is in shares, or debit fund, that is in debenture, or bonds, kind of bonds, etc. Or balance fund as per the investor choice. These are all types of funds, schemes that are available under mutual fund. Okay. So when we invest in mutual fund, we get units. Okay. Like when you invest in shares, they say, you have got capital, like the capital of the company, capital amount of something like that. So when you invest, you get actual units. Okay. The market value of a unit is called NAV, that is net asset value. Okay, fine. Just this is for your understanding. How is this NAV calculated? See, NAV of one unit into number of units is your total fund value. Okay, just remember this. Then next is systematic investment plan, that is SIP. Systematic investment plan. What is it? See, one could invest small amounts at regular intervals in mutual funds. You must have heard, na, per month up 500 pay karo, and then at the end of some year you will be getting this amount and all those things. Okay, those are called as systematic. At regular intervals, what you pay, that is called as systematic planning. Okay, this way of investment is systematic investment plan. This develops discipline. Spelling is wrong. Sorry for the typing mistake. It is discipline. Okay, discipline of savings.
Okay, so this is discipline. Okay, understand, this is wrong spelling. Discipline of saving. Now, investment in mutual funds through systematic investment plan for a long term is beneficial. For a long term, the number of years you go on paying the amount in small amounts at regular intervals is always beneficial. At the end you get nice amount. Okay, so this is one of the kind of investment that you can do it. Shares is also investment, but there is lot of risk. Whereas in mutual fund there is little risk, and in systematic plan there is much more lesser risk for your is invested amount. Okay, so I'll end up here with this thing, but what I want to tell you is that remember these points which we are going to use in solving the examples from next exercise, that is 4.4.
Okay, so now we will see examples from practice set 4.4. Let us see first example. Market value of a share is rupees 200. If the brokerage rate is 0.3%, then find the purchase value of the share. Okay, so as I have discussed earlier, you need to pay brokerage on the market value. Okay, so that becomes your purchase value. Means purchase value will be what? It will be market value plus brokerage. So you need to calculate brokerage first. Okay, now how will you calculate brokerage first? It will be the rate on what amount? That is on the market value, right? So first let us write down what is given to us. Given to us is the market value of a share, that is rupees 200. This is given to us. And what else is given to us? This gap never fits properly. Okay, what is given to us? Given to us is brokerage. Okay, and brokerage rate is given, that is 0.3%. So first we will find what? We will find the amount of brokerage, that is brokerage per share. So brokerage per share, it is given to us, that is rate of brokerage is given to us on what? Of market value of a share. Okay, rate is given, that is 0.3% of what? Of market value is 200, that is 0.3 upon 100. Percent is upon 100 into 200. Okay, so this gets cancelled. What is your answer? It is 0.60. This is in rupees. Okay, so I'll write here rupees. Yes, this is in rupees per share. Okay, now what do you need to calculate is the purchase value. So purchase value of the share, this is what question is given, right? Purchase value of the share will be what? It will be market value plus the brokerage. Okay, this is market value is what? 200 plus brokerage is 0.60. So total rupees purchase value will be 200 rupees and 60 paise. Do not forget to write answer. Let us see the second example. A share is sold for the market value of rupees 1000. Brokerage is paid at the rate of 0.1%. What is the amount received after the sale? Now, as I have explained earlier, that even if you buy or you sell a share, you need to give brokerage. Okay, so same way this person has given, he has sold. Now he has sold, and on top of it he will give a brokerage. Means what? Whatever amount he should receive after selling something, he should receive some amount, but you will have to cancel the brokerage amount from it and then you will get the amount. Okay, so this is what we are supposed to do it. So let us see what is given to us. Market value, that is MV, is given 1000. Brokerage rate is given, that is 0.1%. So we will first find the amount that is to be paid as a brokerage and then we will calculate the final amount. So what will be final amount? It will be the market value minus the brokerage that is been given minus. Okay, so let us see this. First let us write down what is given to us. Given to us is market value, that is 1000 rupees, and brokerage. Brokerage is 0.1% rate. So what will be the brokerage? Brokerage per share means amount. That will be rate of brokerage into market value. Okay, so rate of brokerage is 0.1% into market value is 1000. This is 0.1 upon 100 into 1000. This is getting cancelled. 0.1 into 10 is rupees 1. So rupees 1 is your brokerage. So what will be the selling price that you are going to receive after selling your share? It will be market value minus brokerage. Okay, so this is 1000 minus 1. What is it? Rupees 999. This is your answer. Okay, let us see this third example. Fill in the blanks given in the contract note of sell purchase of share. Okay, B is for buy and S for sell. Table is there already in your textbook. Take reference of that table and I will go on solving so that you can understand. I'll keep on talking also, but you need to understand with the help of the table that is given in the textbook. Okay, so please keep your textbook in front of you and see what is given. Number of shares for first one, it is number of shares is given, that is 100B. Okay, and market value of that share is rupees 45. So let us consider the first one, for which you need to calculate the total, then the brokerage. Okay, all these things are given. So finally you need to calculate the total value of the shares. Okay, so let me write down. That is for the first one. Okay, first one is number of shares bought, that is 100, and what is given? Market value is given, that is of rupees 45. This is given. Okay, now what will be the total value? This you can calculate very well. Total value is nothing but number of shares into market value, that is number of shares is 100 into market value per share is 45. This is 4500. Okay, rupees total value for this. Okay, now what else is given? Brokerage is given. See, 0.2% brokerage is given. So let us write down that. Brokerage is 0.2%. Now 0.2% on what? Brokerage, how you calculate? Wait, brokerage is equal to, see, it will be on what? It will be on the total value, right? So we calculated the total value. So it is brokerage percent into the total value of the share. Okay, brokerage percent is how much? It is 0.2%. Okay, 0.2% into 4500 total value, right? 0.2 means 0.2 upon 100 into 4500. Okay, the zeros get cancelled, and if you multiply this, what is your answer? What you get is rupees 9. See, 45 into 0.2, multiply and check. 5 2s are 10, 4 2s are 8, plus 1 9, right? And this zeros. Decimal is after one digit, so 9. Understood? I hope you have understood this. Okay. Now this is done. This will go in your table. Brokerage is rupees 9. Now what else is given? See, 9% CGST is been paid on the brokerage. Means how much? 9% on brokerage, CGST. Okay. So CGST of 9%, 9% on brokerage. That will be what? Therefore CGST will be what? CGST will be 9% on brokerage is 9. That is 9 upon 100 into 9. That is 0.81 is the CGST. Okay. What will be SGST? SGST will be equal to CGST because they are always same. That is also rupees 0.81. Okay, fine. What else is remaining? You need to calculate the purchase price, total value. Okay, so purchase price of shares. Purchase price of shares is equal to total value plus brokerage plus CGST plus SGST. So that will be the total purchase value, purchase of the share. Okay, purchase price. What is total value? Total value we calculated 4,500 plus brokerage we calculated. How much? Brokerage was 9 plus CGST is 0.81 plus SGST is 0.81. That comes out to be rupees 44,510 rupees 62 paise. Okay, this is for the first one. So same way you need to calculate for the second one. Let us see that. For the second one, second column, number of shares. What are number of shares bought? Number of shares sold. See, B is for bought and S is for sold. I forgot to tell you previously. B is for bought and S is for sold. Okay, buy and sell. This is given, no? So number of shares sold. Now sold are 75. Then market value of the shares sold is rupees 200. This is given. Fine. So therefore, what is the total value? Total value is equal to number of shares into market value. So number of shares is how much? 75 into 200. That is equal to rupees 15,000. This is the total value. Okay. Now let us calculate the brokerage. Brokerage is given at the rate of 2.2%. Okay. So brokerage will be 0.2% on what? Total percent. Total value. Right? On total value. So 0.2% of 15,000. That is 0.2 upon 100 into 15,000. Calculate and see if you get rupees 30. Okay. Now CGST at what? At 9% on brokerage. Right? 9% on brokerage. That is, this CGST will be equal to 9% on rupees 30. That is 9 upon 100 into 30. This gives you rupees 2 and 70 paise. Okay, SGST will be same, will be equal to CGST, that is rupees 2 and 70 paise. Okay, now selling price, here it was purchase price, now here it will be selling price. Selling price will be what? Total value. Now he has to give brokerage in between, so brokerage, he is going to subtract brokerage, but brokerage is including CGST and SGST. Okay, I hope you have understood what I have written. From total value, brokerage will go, CGST and SGST will also go. So what is total value? It is 15,000 minus brokerage was 30 rupees minus CGST 2 rupees 70 paisa and SGST. So what I'll do is I'll add this first and then totally I'll subtract from 15,000, and what do I get is rupees 14,964.60 paise. This you have to fill in your blanks in the column. Okay. Okay, let us see this fourth example now. Srimati Desai sold share of face value rupees 100 when the market value was rupees 50 and received rupees 4,988 rupees 20 paise. She paid brokerage of 0.2% and GST on brokerage at 18%. Then how much shares did she sell? Okay, I hope the question is clear to you. You just need to find how many shares did she sell. Okay, when she has got this, received this amount. Okay, so let us first write down. Let us first consider that it was all about one share. Okay, so let us consider, suppose Srimati Desai sold one share. We are just going to suppose it. So now what will be the brokerage? Brokerage per share. Let us write down the formula. It will be rate of brokerage into what? Market value. Okay. So rate is what? 2.2% on market value. What is market value given to us? See, when the market value was rupees 50. So market value is 50. So this will be 0.2 upon 100 into 50. Okay. So what is your answer? It should be rupees 10 paise. Okay. Now, understand, this is brokerage per share. Now on this brokerage, see, brokerage was paid and GST on the brokerage. See, GST on the brokerage was 18%. So you need to calculate GST. GST at what rate? At 18% rate. On what? On brokerage. Okay. So this will be what? 18% of brokerage. That is, brokerage we calculated 0.10. This is 18 upon 100 into 0.10. This becomes rupees 0.018. This is your GST. Okay. Now, what are you supposed to find is the selling price. See, she has already sold, sold for face value of 100, but we are calculating for 1. Okay. So let us calculate selling price for of one share. What it will be? See, it should be the market value minus brokerage plus GST, right? Brokerage plus GST. So what is market value? Market value is 50. Brokerage we calculated 0.10. I'll put it in bracket 0.10. And GST is what? GST is 0.018. Okay, so what I'll do is 50 minus this becomes 0.118 if I add them. Okay, so answer will be how much? It will be rupees 49.882 is the selling price of one share. Now you need to calculate how? Number of shares. So number of shares, how will you calculate? Number of shares will be equal to selling price of all shares which is given to us divided by selling price of one share which we have calculated. Okay, selling price of all shares is what? See, she received now after selling this much for 4988.20 divided by selling price of one share is how much? This is 49.882. If you calculate and see, do it for yourself, I think you should get answer 100. This is number of shares she has sold, that is 100. Okay, let us see this last example now. Mr. D'Souza purchased 200 shares of face value rupees 50 at a premium of rupees 100. He received 50% dividend on the shares. After receiving the dividend, he sold 100 shares at a discount of rupees 10 and the remaining share were sold at a premium of rupees 75. For each trade, he paid the brokerage of rupees 20. Find whether Mr. D'Souza gained or incurred a loss by how much. Okay, let us go step by step. First, understand what is given to us is the face value. So let us write down face value of a share is rupees 50. Okay, what else is given? At a premium. So premium is when market value is greater than the face value. So premium is 100, right? So what will be the market value? Naturally, market value will be face value plus premium. Market value is equal to face value plus premium. This is equal to 50 plus 100, that is rupees 150. Okay, fine. Now he has purchased shares, means he is doing an investment. Okay, so he has done some investment. Let us write down investment for purchasing 200 shares. See, it is given na, purchased 200 shares. So he has done some investment. And what will be that investment amount? It will be number of shares, that is 200, into its market value which we have calculated just now, right? So shares is 200 into market value, that is 150, gives you the amount of rupees 30,000. This is his investment. Now understand, see, last he is for each trade he paid the brokerage. So while purchasing or while selling also, you need to pay the brokerage. So the brokerage is given of rupees 20, right? So let us write down here brokerage is given, that is rupees 20. So total investment will be how much? Will be rupees 30,000 plus 20, that gives you rupees 30,020 rupees. Okay, this is his total investment. Now what else is given? See, he received a dividend, that is of 50%. Okay, on what? Whose face value was rupees 50, he received a dividend of 50%. Okay, so let us write down that dividend is 50% and face value was 50. So you get dividend on face value. I hope you remember this. If not, understand once again, you get dividend on the face value, not on the market value. Okay, remember this. So he got 50%. So therefore dividend on each share will be how much? Will be 50% of face value, that is 50. Okay, so 50% of 50 is what? 25, right? This is rupees 25. Okay, now this is per share. So dividend on 200 shares, because the person is having, person has purchased 200, so that will be number of shares into dividend per share, right? So number of shares is 200 into 25, that gives you rupees 5,000. Okay, fine. Now see here, he sold 100 shares. Okay, he has sold 100 shares. So let us write down 100 shares are sold. Now they are sold at discount. See, it is given in the question, at discount of rupees 10. Fine. So what will be the selling price of 100 shares? Hundred shares will be equal to, see, the person has sold, okay, and he has given discount. First he has got it for what? 50, and out of that he has removed 10 rupees as a discount. So naturally his 100 shares will be of how many, what cost? It will be 40, right? So 100 shares into, I'll write it 50 minus 10 so that you understand why I have subtracted, because of discount. So this will be 100 into 40. For this much he is selling his 100 shares, that is for 4,000 rupees he is selling. Okay, now amount received. How are we going to calculate amount received? Received after selling means by selling 100 shares. How are we going to calculate? Because while selling also he has to pay brokerage, right? So he is going to pay brokerage of how much? 20 rupees at each this thing he has paid. So selling price is what? Selling price minus the brokerage we are going to calculate to get total amount received after selling. Selling price is how much? We calculated just now, that is 4,000. And out of that 4,000, 20 rupees are gone as a brokerage. Okay, so rupees is 3,980 rupees is what he has received the amount. Now this is for the first 100 shares. What about remaining 100 shares? What he has done? See, and the remaining shares were sold at premium of rupees 75. Premium is face value plus the premium gives you market value, right? So we'll write here remaining 100 shares sold at premium of rupees 75, right? So what will be the selling price? Selling price will be face value plus premium. Face value plus premium, that is 50 plus 75, that is of rupees 125. Okay, now this is for 1. Now the selling price of 100 shares, remaining 100 shares, no? So 100 shares will be how much? 100 into 125 for 1. Okay, so this becomes rupees 12,500. Okay, this is for 100 shares. Now for this amount received, again the amount received will be what? Selling price minus brokerage he will give. Okay, for selling he will have to give a brokerage. selling price is 12,500 minus the brokerage is of 20 rupees. Therefore, the amount that he is going to receive is 12,480 rupees. Right? Okay. Now we need to calculate the total amount he received. See, what is the question asked? Question asked is by how much, whether he has incurred gain or he has got a loss. You need to calculate. So for this you need to know the total received amount, right? So total amount that he received, how are you going to calculate? So he received one amount from this 200 shares because he got dividend and all. So one amount, that is of rupees 5,000. The second amount that he received was after selling this 100 shares, first 100 shares, that is 3,980, and the remaining 100 shares which he has sold for premium, that is this amount, that is plus 12,480. Okay, so the total amount becomes how much? Total amount is rupees 21,460. Right? Now understand how much he has invested. He has invested, total investment is, see here, total investment is 30,020 rupees, right? And how much amount he has received? 21,460, right? So investment was 30 and he received 21. So whether he is in profit or is in loss? Yes, the person is in loss because he invested, he gave this much of amount, but he received only 21,460. So the person has suffered a loss. And by how much means, how will you calculate? By how much is 30,020 rupees minus 21,460. Whatever is your answer is by how much he has suffered a loss. This much I think you can calculate. I hope you have understood this. I will stop my module here, and for problem set I will ask you to try out problem set examples because it is for you all to practice it. If you don't understand anything, you can just message me that you have not understood this example, so that we are going to clear your doubts. Okay, bye for now.